Welcome back to the Dividend Diplomats YouTube channel, everyone. You got Lanny and Bert, your boys, the Dividend Diplomats. Your bracket may be busted after this first week of March Madness, but you know it's not going to be busted? Your dividend income. Because on this channel, we teach you how to buy dividend growth stocks and grow your passive income. So today, we're going to look at one of the high-profile REITs that may or may not be entering our portfolio soon.
Guys, before we dive in, smash the subscribe button, give this video a nice thumbs up. We're trying to reach all the investors out there. So please do us a favor and definitely just click it, ring the notification bell. We're not talking about AT&T today. No, we're not talking about Verizon stock. We're not talking about bank stocks. We're not talking about New York City Bank. We're not talking about Credit Suisse, nor we're talking about UBS.
Yeah, and don't forget, Lanny, what's it called? Flagstar, formerly NYCB, just scooped up Signature Bank. So we're gonna have a new top 30 bank here on our list. So yeah, we're gonna take a break from all of that madness and all of that chaos, and we're gonna talk to you about American Towers. Very simple, AMT. It's interesting. We love talking about all different kinds of dividend growth stocks. We even featured a few weeks ago when I was trying to figure out a strategy to help potentially start building REITs. I put that on pause because of all the volatility in the market, but I still want to take a look at this REIT and see if it's high up on my watch list, or even if I keep adding it despite all of the noise that's going on.
Exactly. I mean, Bert, you're bringing the REITs back to the table, man. I'm excited to see what you may do here. And investors, keep in mind too, when we evaluate a REIT, we're going to use the funds from operations, possibly the adjusted funds from operations, as a form of like their earnings per share, because that is a more appropriate way or method to evaluate real estate investment trusts. Again, more than likely, these payout ratios are going to be a little bit on the high side for AMT, possibly. But again, just keep that in mind as we evaluate them through the Dividend Diplomat stock screener, which we've already discussed the two. And then that third metric is going to be dividend growth.
That's right. So here's how we're going to lay out the rest of this video. We're going to talk to you about AMT, give a quick background. We're going to talk to you about debt and interest rates and why that's going to be so important for REITs, and making sure you're monitoring and picking this very closely and keeping a very close eye. We have a quick rundown of their recent earnings release, and then we'll run them through the stock screener. What do you think about that, Lanny?
I think I like that. I think that's one hell of a deal, Bert.
You got yourself a gosh darn deal. All right. So who is AMT? Global. I didn't realize how global this company was until I started doing this research. I knew they were one of the largest cell tower owners out there. I didn't realize they weren't just in the US and Canada. Shame on me. They're nationwide. In fact, they have over 225,000 towers. The majority of their operations are international. 181K of these towers are international. Only 43 are in the US and Canada. Interestingly, though, they're moving on a little bit from not just cell towers. They made a big acquisition, a $10 billion acquisition here in 2021 of CoreSite Realty. They picked up 28 data centers too. So they're no longer just cell towers. They're making a move into the data center too, which is interesting. And why is it a potential great strategy, Lanny, for them to build this base in these two big areas?
Data, and then obviously telecommunications. Really, we're trying to grab a stronghold on the network communication channel here. And the property, it's pretty finite. So if you own the property, you own the rights. And that just really means a cash flowing machine of what AMT is.
Yeah, and it's a high barrier of entry in this. You can't just snap your fingers and own 225,000 towers. That's a lot. It takes a lot of capital to do it. And when you're working with a major company, these companies don't want to start changing towers. They don't want to start doing this. There's a stickiness to this product that keeps the major cell lines there and the major cell phone providers, because it would be a really big pain to just up and move your towers because of some dispute. So it's a great sector to get into.
And you're on long-term leases.
So yeah, it's not going to be cheap to break those leases. So that's why they're exciting. That's why so many people talk about them and so many people cover them, because of the long-term potential and the cash flow madness and chaos, and the cash flow king potential here for AMT. So now let's talk about their debt. And Lanny, do you want to give a quick rundown here of interest rates and how the potential impact it could have for REITs and their financials going forward?
Yeah, obviously in a rising rate environment, REITs grow typically by issuing debt or shares of stock in order to buy and acquire properties. So as they issue or refinance or redo or restructure debt in a rising interest rate environment, that's going to increase the outflow of cash because of the increase in interest expense. And Brett, I know they just issued some new debt just recently, but overall the debt has been down net year over year. But you want to go into a little bit of details on that?
Yep. Yeah. The new debt issuance was 1.3 billion at a rate of 5.49%. The maturity is in March 2053, but it's only expected to be on their books for 5 years or so. At least that's what they highlighted in the press release. And they're going to use it to pay down their old debt. So interestingly, the debt's higher than what's on their books right now. If you look at their financials for some of the other debt that's coming due, lower interest rate debt is coming off the book. So their footnotes from the 10K show debt anywhere from like 1% to 4%. It could be any one of those. Not exactly sure what they're paying down, but so they're paying it down using higher interest rates. So the potential for interest expense is there to increase a little bit. That's why it's so important, though, that outside of this, they're also paying down their debt, as you highlighted. Their debt dropped from 43.25 at 12/31/21 to 38.6 in over the years. So even though they're putting on higher interest rate debt, they're paying down a much more significant amount. So the overall interest expense is decreasing for AMT.
Wow. And guys, I mean, if you haven't noticed, obviously communication channels are growing. 5G, yes, 5G. We're talking about 5G still here in 2023. That's still being, kind of rolled out, which means more tower usage, which means more leases, higher cost leases. So with that means more cash flow, more revenue for AMT towers. I know that these leases that they have with Verizon, AT&T, the large and the big communication channels, again, they're long and they're expensive for those telecommunication providers to lease some of the space from AMT.
That's right. And you can really see the results come through the financials. We'll pull up the chart here from their last earnings release that shows it. Over the year in 2022 compared to 21, property revenue grew 14.9%, total revenue grew 14.5%, adjusted EBITDA grew 11%, AFFO grew 7%, and AFFO attributable to common shareholder grew 5.6%. So strong growth, double-digit top line growth, and nearly double-digit AFFO growth for AMT over the last year. So you're absolutely right, Lanny. Leases are going up, more customers are coming in, they're getting in more revenue, and it's trickling through the financials. Things are looking strong for AMT.
Yeah, I mean, the demand is there from the consumers through the communication providers, right, to AMT. Again, they have pretty big targets of 10% dividend growth. And they're seems like they're going to be committed to paying down their debt. But Bert, let's look at the stock here. Let's look at the metrics of AMT. There's a lot of noise out there in the industry to avoid the high yielding stocks in the telecommunication industry, such as Verizon, AT&T, you name it, and to look more at the towers, such as AMT or CCI. So let's dive in and peel back the layers of AMT stock.
Let's do it. That first metric, price to earnings ratio, which we're moving to the price per FFO ratio. Price 201.35 forward, AFFO or FFO for 2023 per Seeking Alpha is 979. FFP to FFO ratio is 20.57.
Definitely not the cheapest REIT out there, guys, especially in this extremely volatile stock market. Obviously, you got to thank the banking crisis for that one. But 20.57, yeah, I'm not sure what to make of it yet right now.
Yep, me neither. So let's just keep going along here. Let's keep moving to the metrics. Annual dividend, $6.24. That's a payout ratio of 63.74%.
That's pretty low for a real estate investment trust, guys. Usually you might see in the 80 percentile here, 80 to 90. So 63 is really low, Bert.
It is. And their 5-year dividend growth rate, 17.47%. They've increased that dividend for 10 plus years. And as you mentioned already, they're targeting 10% dividend growth for this year. So they're planning on at least maintaining that double-digit dividend growth streak.
Oh, and they have the room to do it, guys. That's Ric Flair. That's real and dealing, real stealing. Woo! he drinks more liquor. He drinks more. Never mind. But
Yeah. No, their
uh,
yield, I mean, just to end it here, their yield's 3.10%. So, in summary, and then we'll give our final thoughts about it. Price per FFO 20.57, payout ratio 63%, 5-year dividend growth rate 17%, 10 years of increasing that dividend with a yield of 3.10%.
pretty lower yields for a real estate investment trust, just simply because of the nature of the beast. You're taxed typically as your ordinary income rate. There might be some tax credits to help offset that income come tax time currently, but you typically do see well over 4% in the REIT space, just because they're required to pay out so much of their earnings back to their shareholders. But Bert, I mean, love the industry, love the space. Obviously, very sticky. Long-term pipeline is always there for these tower providers. You're looking for a REIT, just
Yeah.
hit us with what your gut is saying. Hit us with your best shot, Bret Hart.
Yeah. It's just telling me that it's priced like it's a very high quality REIT. And that's what the metrics are showing. And right now, I think it's more important time than ever to focus on quality, especially with rising interest rates. It can potentially cripple a dividend for a higher yielding REIT that doesn't manage their balance sheet well, that finds itself susceptible to increased interest rate. Nice thing about AMT, it's clearly not the case. They're focusing on paying down their debt, and they're showing that they are able to do that even in this rising rate interest environment. I would obviously like it to be a little cheaper and the yields would be a little higher. I'm not going to lie. So I'm not going to run to buy AMT today, but this market's irrational right now. There are twists and turns every day. If there's a sudden drop in the price, say AMT falls to below 190 in the 180s, maybe in the 170s. I know that's far away. Could happen though, because who knows? I would happily start my position in AMT with a slightly higher yield. What do you think about that, Lanny?
Hey, I can dig that, man. I
Mhm.
mean, you've been looking, you've got your price, you've got where you'd like it to be. Stick to it. Obviously, you don't have to run and buy it. I know you've been, if you haven't caught the last video, buying up bank stocks while they're, in the range. Maybe there'll be more value this week as well there. So I understand that you're not running to the REITs right now, though.
Yeah, but it's great to just know and do the research ahead of time. So when the moment to strike is there, you can just act without having to do it. So everyone, let us know what you think about AMT in the comments below. And overall, what are your thoughts on the REIT sector? Are you staying away with this rising rate environment? Do you find that there are any other great values out there, or are you seeing a lot of value traps in the REIT sector? I'd be very curious to see what you're thinking right now.
Yeah, very curious if you're scooping up REITs that are in the 3% yield range, based on the prospects of future dividend growth, like AMT. If they keep juicing this up at a double-digit growth, your yield on cost ends up getting pretty superior in the medium to long run, obviously. So,
Yeah.
Bert, any other parting words outside of subscribe to this channel and like this video if you haven't already?
Oh, just what we usually tell everyone.
What's that?
You're not with us, you're against us.
Guys, that was Bert, and this is Laney from the Dividend Diplomats, over and out.